So many traders think the secret to making real money is just finding a better strategy. They're on this endless hunt for better indicators, cleaner entries, or they just glue themselves to the screen for more hours, thinking if they just analyze harder, they'll finally crack the code. But they are completely, totally wrong.
Okay, let's get right into this because this is the one hard truth that most people just don't want to hear. The reason you haven't found that consistency you're looking for, it's almost certainly not because your strategy is broken. It's because your psychology is. And there are 5 very specific errors that are causing the damage. Until you fix those, no strategy on earth is going to save you. So you've got this split, right? The vast majority of traders are focused on all this stuff on the left, the external stuff. But the tiny few who actually make it, the ones who succeed long term, they're laser focused on mastering the internal game over here on the right. And today, we are going to break down those 5 psychological traps so you can finally see what's really been holding you back. Look, I had to learn this the hard way, believe me. I once had a strategy I spent 6 months back testing, and the results? They were incredible, a 62% win rate. On paper, this thing was a literal money printing machine, but when I went to trade it live, it was just choppy, frustrating, and if I was lucky, I was basically breaking even. The problem wasn't the strategy, it was me. And what's so fascinating about this is that we're wired to blame everything else, aren't we? It's the news, it's the volatility, it's market manipulation. But the real reason for those account-destroying losses, it's always internal. It's a psychological mistake that you're making, probably without even realizing it. So let's expose them one by one, starting with the absolute biggest one. This right here, this is the single most destructive error. It leads to more blown up accounts than anything else, period. And it's so simple. It's entering a trade without a crystal clear, predefined idea of your risk. And it comes from a place we really don't like to admit. So picture this guy, Marcus. He sees a setup that looks absolutely perfect. The structure is there, the volume is spiking, everything is screaming, buy. He jumps in full of confidence. But he doesn't place a stop loss. Why? Because in his head, this trade simply could not fail. The price pops up a little, then it reverses. He just holds on, telling himself it's a pullback. It keeps dropping, and now he's frozen, just hoping. What should have been a small, planned loss just turned into an absolute disaster. And here's the crucial part. This isn't about being lazy. It's about a deep, primal fear of being wrong. See, to define your risk, you have to actually think the thought, this trade might not work. And that one simple thought can be so psychologically painful that your brain just avoids it. It convinces you that you can't possibly be wrong this time. The fix for this is brutally simple, but it works. Before you even think about clicking that mouse, you have to say the sentence out loud or write it down. You force your brain to confront and accept the possibility of loss before you're emotionally invested in the trade. Once you've truly accepted it, putting in that stop loss becomes automatic. The internal conflict just disappears. Okay, let's move on to the next trap because you'll see how these things start to stack up. Our brains, well, they just weren't built for trading. They absolutely hate uncertainty and they crave predictable patterns. And that creates a massive problem because trading is a game of probabilities, not certainties. So here's Sarah. She's got a great strategy, a clear statistical edge that she's tested over thousands of trades. She takes 5, just 5 live trades. She loses 3, wins 2, and ends up with a small net loss. What's her immediate thought? The strategy's broken. The market changed. She immediately starts messing with the rules, adding more filters, and completely trashing a system that actually works. But just look at this for a second. 5 trades? That's nothing. It's just random noise in the grand scheme of things. Her proven edge needs a sample size of at least 50, maybe 100 trades, to even start showing itself reliably. But her brain couldn't handle that uncertainty. It needed to find a reason, a pattern, right now. This is the huge mindset shift you have to make. Think about a casino. The casino knows it has an edge in roulette, but it has absolutely no idea if the next spin is going to be red or black. It doesn't care. It focuses on the results over thousands and thousands of spins. You have to treat your trades the exact same way. So the fix here is to pre-commit. Before you even place trade number 1, you write it down on a piece of paper. I will execute this strategy for the next 100 trades before I make any judgments. Then, when you're on trade 15 and you're in a drawdown, you don't panic. You just look at your note and say, okay,
85 to go. This is how you train your brain to think statistically, not emotionally. All right, now we get to a really dangerous one because this next trap, it doesn't just cloud your judgment. It actually shuts down your brain's ability to even see risk. It's that invisible line you cross from healthy confidence into a state of risk-blinding euphoria. So Alex, he is on a roll. 3 straight winners. He sees another setup, and the thought that pops into his head is, I am on fire today, I gotta press this advantage. So he doubles his normal risk size. The trade moves a little bit his way, and that euphoria just takes over, convincing him this is the big one. He starts ignoring warning signs, holding through pullbacks he'd normally get out of, and then it reverses, blasts past his entry, and wipes out all 3 of his previous wins, and then some. When you are euphoric, the parts of your brain that assess risk, they literally go offline. You are physically incapable of seeing the danger in front of you, so the fix has to be an external system, a checklist. If you notice any of these signs, your heart is racing, you feel like you can't lose, or you're already spending the profits in your head, you have to intervene. Cut your size, or even better, just walk away for the day. Okay, these last 2 traps, they are the most insidious of all. They don't scream at you like a big, painful loss. No. They whisper. They operate from your subconscious. They are the hidden beliefs and the deep-seated fears that cause you to sabotage your own success even when you're doing everything else right. Let's break down these 2 sneaky forms of inner sabotage. So the first type of sabotage comes from your money blueprint. You know, those beliefs about wealth and what you deserve that we all picked up as kids. If your subconscious mind believes that easy money is somehow bad or immoral, or that you just don't deserve it, well, what do you think happens when you find yourself in a clean, effortless, winning trade? Your subconscious hits the eject button. It'll create a reason to get you out, making you feel like you're being smart, when really, you're just acting out an old script that's costing you money. Now, if your subconscious isn't busy snatching profits away from you, it might be stopping you from even taking them in the first place. This is the other side of the sabotage coin. Our 5th and final trap, analysis paralysis. After a nasty losing streak, your confidence is just shot. You see a perfect setup, it ticks all your boxes, but you freeze, you hesitate. You tell yourself, I just need one more confirmation. You just keep analyzing and analyzing, trying to use logic to get rid of that fear of being wrong again. But here's the thing, you can never eliminate uncertainty. You can only accept it. So the fix for all this inner sabotage really needs a 2-pronged attack. For those hidden beliefs, you have to drag them out into the light of day. Do the exercise, write down what you really believe about money. Then ask yourself, does this belief actually help me as a trader, or does it hurt me? Just being aware of them starts to rob them of their power. And for the paralysis, you need a hard, non-negotiable rule. Something like, if all my criteria are met, I have 60 seconds to pull the trigger. If I don't, I have to close the chart and walk away. It's a circuit breaker for that endless loop of second-guessing. So you can start to see how these 5 errors all work together, right? They create this vicious cycle. One mistake leads to big losses, which destroys your confidence, which then leads to paralysis, and on it goes. But what happens when you start to eliminate them? When you start eliminating these errors, everything changes. You get this amazing, positive feedback loop instead. You define your risk, so your losses are always small and controlled. You think in probabilities, so you trust your edge even during a drawdown. You recognize euphoria, so you protect your capital. You clear out those limiting beliefs so you can actually hold on to your winners. And you break your paralysis so you finally just execute your damn plan. But here's the hard truth. 95% of traders, they'll hear all of this, they'll nod their heads and agree, and then tomorrow, they'll go right back to making the exact same mistakes. They'll keep chasing that magic strategy, ignoring the real work that actually needs to be done. But you're different. You're still here. You see the patterns now. The question is no longer about knowing what to do. It's about actually doing it. Will you do the work, not just today, but every single day, to spot these patterns in yourself and choose a different response? Will you be part of the 5% who actually master their own mind? The choice, as always, is yours.